welcome. My name is Mellinghoff. I have the honor to moderate a panel on wealth management here in Switzerland as a German living in London. I would like to introduce very briefly my speakers, my panelists, co-panelists here. Let's start with Andras, who is with Adjoint in the business development team. Please, you have still the free choice. Hello again. Then Gogol, who is of Polish descent, who lives in Poland but is very frequently here in Switzerland, as far as I know, because he's the CEO of WealthArc. Please have a seat, a Polish Swiss startup. Simon Maignan, I hope, sorry, English is Simon then. He's in the business development of Thomson Reuters. Please have a seat. Hi. And last but not least, Leo Berent, who's the managing director of the Credit Suisse Strategic Clients Office. I hope I pronounced this correctly. And you see that we have a very diverse panel here. With this, I look a little bit into the direction of the organizers, John. Diversity I would have very much appreciated here. But obviously, I'm very happy with my panelists here as well. And I would like to give you a bit more background what I've been doing and why I'm honored to moderate here. I was with Commerzbank Asset Management for about 10 years and then left the banking world in 2010 and went into a fintech startup when the term fintech wasn't really coined yet. And that happened to be in the wealth management space, and since then I'm following everything what is happening in this space very closely. My firm Techfluence runs the Fintech Forum in Frankfurt, which matches fintech startups and investors. Next one, 22nd of November in Frankfurt, by the way. And now I would like to ask my panel to introduce yourself a bit longer than I was able to do it, and also explain to us what exactly you are doing in the area of AI, or what solutions you provide. The mics are yours.
Hello, this works? Okay. Thank you, Michael. So I'm Andras. I work for Adjoint. We are a technology company in the financial services space. And we are in the blockchain space. We are an enterprise blockchain solution provider company. So we have a private and permissioned a blockchain network that we deploy within enterprise environments in order to leverage the power of distributed ledger technology and smart contracts. And we build these blockchain networks within the company in order to leverage the power of these networks and automate workflows and streamline processes. And I think what's very important when it comes to artificial intelligence is what we do is we're introducing a new way of structuring data within corporate environments. So currently, it's standard is that there are isolated databases within the organization, and these databases are mostly static. Some of them are dynamic, but they're not very good when it comes to interconnectivity. So, and everybody thinks when it comes to blockchain, yeah, cryptocurrencies and all that stuff, but this is an absolutely different space that we're working with, still leveraging blockchain technology to practically synchronize databases and structure information in a different way, and as a result, we are kind of an enabler for all the innovative technology providers, such as artificial intelligence or machine learning, because these providers can access this data in a much more efficient and much more structured way, and then build on that when it comes to AI solutions. Does that answer?
Absolutely. Chris, how are you using AI in WealthArc?
It's actually, hello, my name is Gogol. I am a CEO and founder of WealthArc. WealthArc is a... Yeah, that mic is better. So WealthArc is a platform for digital wealth management. We are offering various modules to our customers, and actually one of them is very related to AI and the whole topic of automatization. Generally, there was a research published recently that 70% of the processes that wealth managers are doing today can be automated. And it means that in the future, a wealth manager, portfolio manager, when he comes to work, just in 2 hours, he will do what he's doing in 8 hours today. And simply we are offering that technology and those services to wealth managers. I mean, at WealthArc, we generally specialize in data consolidation because before you automate any process, you need to get access to all of your data, market data, portfolio data. And we're simply offering an API engine that can connect to any private bank and consolidate all portfolios in one database.
Wonderful. Simon.
Thank you, Michael. Good afternoon, everyone. Great to be at the Fintech Plus event on the Wealth panel. My name is Simon Maignan. I represent the investment and advisory business at Thomson Reuters, which includes wealth management. So for those of you who know a little bit about our company, we operate really at the heart of content and technology. So I would say that our approach to AI reflects a bit of both. So on one end, in terms of content, we power AI-driven firms with our world-class content. It could be Reuters news, company financials, even economics data. A good example of this is actually WealthArc. As Chris described, they have developed a next-generation portfolio management system integrating data from various custodians through automatic API, while Thomson Reuters powers WealthArc with our pricing and reference data so that customers can better perform portfolio valuation as they usually prefer our market data than the ones from custodians. So that's content on one side, and on the second hand, it's really technology, where we use AI and machine learning techniques in our own solutions. Maybe a good example of this that is applicable for wealth management is what we call Thomson Reuters intelligent tagging. And so this leverages natural language processing, data analytics, and data mining technologies. And what we do is we try to turn large amount of unstructured data into really a precise advantage for our clients. So if you take into, as an example, a news article or even a blog post or a research report, we try to capture identity. So an entity. So an entity could be a company, could be a person, even a medical condition. So we identify this entity, we tag it with a preset metadata. And then we give it a relevance score to indicate how centric that entity is to the containing documents. So in other words, we really try to enrich documents. So again, our approach is really in terms of content and technology.
Leo.
Thanks, Michael. Actually, listening to my fellow panelists, I'm probably kind of the least technologically minded out of, actually probably of the whole room, so you have to bear with me a bit. The only kind of tech side I did, robotic engineering, feels like when Terminator was cool many years ago. I'm at Credit Suisse since 2001. I represent a team that's called the Strategic Client Office. Effectively, we cover large family offices and privately held holding companies. And I think I can share some of the insights a little bit from some of our client angle as to what they're looking for and doing in the tech space, and can also probably share some insights also a little bit as to what CS is looking at least from our end. Talking about end investors and our clients here, I'm talking about privately held holding companies. It's clear we've seen a resurgence over the last, especially 3-4 years, that I think pretty much every single large private family office has a form of tech investment. And interestingly enough, it hasn't necessarily been investing into VC and outsourcing it completely. I think we're seeing that a lot more in the US. I think in Europe, that's picking up. But I think pretty much every single one of our, call it large client groups, want to have some form of exposure to tech. And often that's just doing investments in different rounds of companies. Some have early stage, some have later stage. An interesting trend that we've seen is that, and I know it's not necessarily fintech, but just I'd say tech in general, and especially where AI is being put to use, is there's a desire to invest into technologies that might be disrupting to their core business. So a big family that's made a lot of money in food retail, for example, will be actively seeking retail tech. people that have been in healthcare are looking into healthcare tech. So there's a certain knowledge of the underlying. Now, this doesn't necessarily happen at the operating company, but as the investors, the end investors' pocket, they will often look to invest there. So that's an interesting trend, and we're obviously, as a firm, doing our utmost to kind of accompany them, introduce them to situations. We organize all sorts of farms and events where we can. We have a high-tech farm, for example, in Israel. We do something called Private Innovation Circle, which is bringing up together startups with our investor client base. If I can just mention about Credit Suisse, I don't know if it's...
Absolutely, please go ahead. That would have been one of the questions. How is Credit Suisse using AI today, if at all?
So I think I can give some insights. There's some people in the room. I mean, Chris is very committed to AI and fintech. I've been doing it for quite a while, and a number of CS people or colleagues are in the room, could probably give a much more detailed answer than myself. I think if I look at the history of us investing into fintech in particular, it started a lot with kind of operational aspects that were kind of behind the scenes, not necessarily what the client would see. So settlement mechanisms and so on and so forth, all these processes which are very time consuming from a human interface point of view, which can be automated. So we saw a lot of that. Then I think the next wave after that was RegTech, as you say. So when it comes to compliance, when it comes to, you know, we've got a partnership with a big US firm to look at behavioral analysis on email contents and so on and so forth. So a lot of this has to do with the regulatory component and making sure we're completely on top of all the kind of compliance efforts that we have. And I feel it's over the last few years that we're really starting to go more and more on the client end. So having sorted some of our back end, we're now focusing on the front end. And quite a lot of work has been done around segmenting our clients for the, you know, what are the right clients that would benefit from what type of kind of AI type of applications. And I know we're going to talk about Robo a bit later.
Chris, how do you see AI transforming wealth management?
I mean, I think the biggest change will come from robo platforms in wealth management. I think Switzerland is a very interesting market. There are over 3,000 of those traditional wealth management firms, and they are very slowly waking up. And I'm pretty sure that in the next 1-2 years' time, some of them will go digital. Even if we assume that 10% of them would like to have digital wealth management platform that already creates 300 of companies in Switzerland alone. But here there are some obstacles in Switzerland. For example, if you would like to offer a fully digital onboarding process, then most of the custodian banks do not offer such service. And then those companies are talking to banks in Germany. Another challenge might be that what high net worth people like in Switzerland, they can come, they can choose their financial advisor, and they can choose custodian bank in which they can keep their investments. Whereas usually when you work with a robo platform, you have to go just for one custodian bank. So I think it will be a big revolution once those Swiss wealth managers offer a fully digitized wealth manager that is agnostic for a custodian bank. I mean, and with all those changes, those Swiss wealth managers will be able to address the market of affluent clients. Today, wealth management and private banking is only for high net worth individuals. I believe that in the future, powered by technology, they will be more efficient and they will be able to provide typical private banking services to less affluent clients. And at the same time, to some other clients, they will be able to provide a fully digital advice.
Andras, you want to add something?
Sure. So I think it's obviously AI is going to, it's already having a substantial impact on how wealth management works in general in various areas, from asset allocation to human and client interaction, etc. Still, and this is going to accelerate further. So the area which excites me within this topic is, and this has been discussed, is the fact that even within a company, information is scattered across. So there's limited room, or it's not very efficient to share information even within a company. So the AI use cases that we see are very specialized on a particular domain. There, the impact is significant, but there is a lot of additional room when it comes to opening up these data silos. First, I think within a company, and then going outside even a company. So I'm just wondering, like, when for example, these algorithms will be able to go out and interact with other companies in order to identify best investment opportunities, and then process even transactions automatically without potential human interaction or limited human interaction. And I think this is what's slowly getting started in the AI space. So we already see some initiatives or use cases, but I think once companies will be much more integrated when it comes to data and will start really sharing information across companies, I think this is where there is substantial room to grow here.
Sharing data. That's a question now to Simon. Obviously, you're a data company. How difficult do you believe it is for Swiss banks especially to introduce a form of data sharing culture that was not in the DNA? I mean, for obvious reasons for a very long time.
Yeah, I mean, I just wanted to come back to maybe Leo's point. I completely, when we talk about artificial intelligence, I completely echo his remark around compliance. We actually commissioned Forbes Insight recently to conduct a survey of wealth managers to really understand how they use technology and how that is transforming their profession. And 65% of them actually cited client acquisition and onboarding as the activity taking up most of their time. And that's not a surprise, given that the client identification process requires a lot of information gathering on to ensure compliance, as Leo mentioned, with regulations such as KYC and anti-money laundering. And we are quite active in this space with our WealthArc sanction screening capabilities, which actually leverages machine learning that helps increase efficiency by filtering unstructured data from over 10,000 web and print sources. And I think AI can tackle larger societal issues such as financial crime. Today, only 1% of the financial crime that is happening through the banking system is being stopped. And so I think AI can bring together the industry, government regulators in finding a new approach. And you see a lot of startups, especially in Switzerland, coming up with new solutions around fraud detections, sanction screening, anti-money laundering, and they are really increasing the transparency and the accuracy of these processes without eliminating the need for people who make the ultimate decisions.
Thank you. I would like to come to another topic we agreed to touch, Robo Advice or digital wealth management. We had or have very interesting developments in this field. There are more than 100 Robo Advisors in Europe as we speak. There are constantly new market entrants, interestingly, especially in the B2C, although the early B2C Fintech or robo-advice startups do have problems in asset gathering. So I would like to learn from you, what do you think? Are we seeing a peak robo, or is robo-advice becoming a commodity? If we look into Germany, some big banks have introduced robo-advice, basically a hybrid version of that across the branches and so on. So it looks a bit like more becoming commodity, but what is your view on this? Who wants to start?
Thanks. Yeah, happy to start. I think when it comes to robo-advisory, the core of the topic is the interaction between the human and the computer. And then how we process that information once the information is captured. So currently, obviously, or ideally, there is a human between the customer and the company. So the human interprets the information and then processes it, puts it into the system. So this is the very manual, time-consuming process. It's very expensive. This is what we're trying to get rid of. So this whole robo-advisory space is tailored around this. In my view, and I think this is huge, because we can now better and better process human information, both vision, text, and speech, and we can use this to directly write this information into the databases. That said, I think, on one hand, I think this is going to be to a certain degree a commodity, like how we process this information. At the same time, I think this is going to change as quickly as the whole technology space, because, so this is an extreme example, but now I've been working a lot with the technology people who write codes, and they just only want to use the user interface. They just immediately write into the code. They are just jumping that step, and there's a new generation growing up, and these people, they are going to be like digitally literate, like much more than ourselves, and then they will require much different interaction with machines like us, or maybe even more conservative people, like my parents, who are also looking for similar kind of advice. So I think it is going to be a commodity, but it's still going to change dramatically over the coming years. That would be my take.
I agree that there are some forces that are really pushing towards robo. The whole digitalization is one of them. The important thing is that the clients of wealth managers, they are usually former entrepreneurs. They like innovation, and quite often they already have the latest iPhone, the latest tablet, and they also want that digital touch. I think that we don't have to wait for it. It's already here. But there's also a second force, which is the whole regulation and pressure on wealth managers and private banks to cut costs. I mean, they need to be more efficient, and simply when it comes to affluent clients, they will not be able to provide services to them as they do today, and they will have to decide whether they go for robo or they skip that market.
Leo, what is your view as Credit Suisse on the robo advice?
I mean, I think, yes, it will come, absolutely, right? And I think this is the point where segmentation is important. There's the right type of product for the right type of client. And I think if you give, the more choice you give, the better you are in a way. And so I think if you look at the banks and at least the outside, let's call it the inside-out view there, is that, we're constantly, as you were saying, Chris, we're constantly under cost pressure. So whatever we can find to optimize resources is something that we are welcoming of and not pushing back against. I mean, if we can, let's say, take a portfolio manager, take him or her away from kind of more mundane day-to-day and get them staffed onto a specific niche, like, I don't know, digital health, like what portfolio management, digital health as an example, that's a win for us. And so, there's not that much leeway anymore in banks to be able to afford to have people sitting and doing more mundane tasks. So the robo advisory system will happen, but to be honest, I see it, or we see it more as a tool to increase bandwidth rather than a substitute.
So you don't fear cannibalism, because obviously it reduces costs, and that makes a lot more sense by even the agent UIs to use?
Yeah, quite frankly, no, because I think it's about putting resources on the higher value end of the spectrum, where if we look at our client base, it's true probably some of the more affluent client base, which are maybe more low touch, not all, but many of them will be more low touch. To a certain extent, that makes a lot of sense. But we're growing a lot in the high net worth, ultra high net worth, which is very high touch, which we're quite far from seeing any form of robo advisory there, and where we desperately need more resources allocated. So it's a win-win.
Okay. We at TechFluence expect not only banks and non-banks to enter the robo-advice scene. Not only banks and asset managers to enter, but also non-banks, because it's all about data in the end of the day, and the best quality data you get when you're directly at the spot. So that's why we believe there are going to be even more robo-advisors on 5 years time frame from the 100 we have at the moment in Europe, even more than 500. That's our prediction. And one segment of the market that we have sort of on our radar to potentially enter is the media guys. So the question is to you, Simon, obviously. I mean, you have a vast amount of data. Now AI suddenly seems to happen. It is technically possible to use such amount of data in a quick and appropriate way. If you apply to the vast amount of data you have and you see, and that is accessible for you, the right algorithms, would you be ready to become the biggest robo-advisor in Europe or even globally? To challenge Vanguard in the end of the day?
Well, just maybe to before answering that point, I think as individuals are assuming more and more responsibility for their investments. I think robo distribution has become the most compelling way to work with them. As mass affluent customers, the millennials are increasingly adopted robo advisory services. When their assets reach the certain level to become high net worth or ultra high net worth, they might not transition to a traditional wealth advisor or may use a hybrid model. So from this perspective, I think we will see a growing adoption of robo-advisory services. Yes, I mean, well, of course, we have lots of data and interesting technologies. So we already have some automated investment technologies. We have a team called StarMine based in San Francisco who, for instance, they have a lot of automated models. One is a text mining credit risk models where they train computers, machines to dig through transcripts, news statements, and identify keywords that are associated with credit risk. So we have a lot of those capabilities, but at the end of the day, this is not our core business. We are not providing any financial advice. So for instance, we will never send questionnaires to assess the risk tolerance of our clients. We don't have a fiduciary duty. So I think, of course, we can, and this is a growth segment for us, is we can power data and technology and maybe outsource some of those robo-advisors, but we will never provide direct financial advice, even via robo.
Okay. Let's see where this goes. Maybe it could become a core service at some point of time, depending where the bigger value is in future. How much more time do we have, Joan? 5 or 6 minutes, right? I think 10 even. Anyway, let's leave the robo space, or maybe we will come back to it. I would like to talk a little bit about your views on how the Swiss wealth management scene is going to develop in the next 10 years. And I remember a conversation I had with Chris many years ago, and he told me about a vision he had at that point of time, which was basically a bank consists in future of only 2 people. No employees, just 2 managers, a CEO and a CTO, basically deciding jointly which APIs are going to be deactivated or activated. Are you still following this vision at WealthArc? How do you see your own statement now, probably 2 or 3 years later?
I mean, absolutely. I still believe that the future of banking is 2 people, CTO and CEO. And I think that we even get closer to it. Here, I believe that for some companies like Thomson Reuters might be hard to become robo because they need a license, banking license, which is not so simple to get. And I think banks in the future needs to specialize in that, making sure they fulfill with their regulations. At the same time, they have a strong brand and reputation and very strong relations with their clients. And actually, everything else should be outsourced and will be outsourced to third-party companies. I believe there will be fintechs and RegTechs because they can automate everything. Generally, banks today, even in the panel in the morning, it was mentioned that banks are becoming IT companies. But actually, banks were not set up to develop IT software. Banks were set up to help people, to help entrepreneurs get loans, develop their business. And I think in the future, banks will come back to their initial role, why they were actually invented, and IT will be back to IT firms and fintech firms. I mean, it's also not possible to be good at everything, and IT firm or fintech will be always better in technology, will attract the best engineers. I mean, we even have such open marketplace at WealthArc already today. I mean, we know we can be good in everything, so that we have open API to our solution, and we team up with some RegTech companies that provide us with information about the product suitability, risk management, and I really believe that a collaboration between different fintech and RegTechs is the future, and it's actually already happening slowly.
Do you have, let's be a bit more concrete, how do you see the number of players developing? More fintech players, maybe less traditional players, mergers? What's going to happen in your point of view? in 10 years' time, 2028, when we can return here?
I think it also depends on the area. When it comes to wealth management, I think the market is big enough in Switzerland for big 3, maybe 4 players providing the core services. But what I also see, there is more and more fintechs and RegTechs that specialize only in one process, and they are absolutely the best. They are absolutely the best in it. But I think the appetite and the market will also grow very quickly. I mean, in Switzerland today, we have almost 300 banks, 3,000 wealth management firms, and they need digitalization. I mean, we mentioned before that some databases or data can be used more efficiently, but the problem we have in Switzerland is that a lot of processes is still done on paper, and they need to be digitalized. I know a lot of wealth managers in Switzerland who are still keeping everything on a paper, in a safe, in a vault, and their office. So I think all those things will happen all together. There will be the big digitalization, the big automation, and then also AI will step in.
I think Simon wanted to add something. Yeah.
Yeah, I wanted to challenge a bit Chris on when he said that he expects large financial institutions, banks to go back to their core business and sometimes outsource their IT. And it's not really my idea, but you may have read a report from the World Economic Forum last year in 2017 in association with Deloitte. I think it was called Beyond Fintech, where I think the main author, Jesse McWaters, he coined the term systematically important techs to describe the interconnectedness between large financial institutions and technology companies. And really the point is that technology has become a source of competitive advantage and differentiation for banks. And it's also a way to retain talent, and for some, it almost becomes a core business. I think perhaps the best example of this, well, it's not a bank, but it's BlackRock, one of the largest asset managers in the world. We may think of BlackRock as, again, the largest ETF provider in the world with its wildly successful iShares series. But a quarter of their 13,000 staff worldwide is devoted to technology. And half of those are working on Aladdin. You may know Aladdin, the risk analytics and portfolio management system. So I think those banks will increasingly look at technology and it may even become their core business. And I guess as far as the question around consolidation in the Swiss market, I really think wealth management, especially in Switzerland, is prime for consolidation. If you compare it with other areas of the banking market, for instance, FICC, fixed income, currency and commodities, JP Morgan estimated that the top 6 players in that industry represent 60% of the market. This is not true, obviously, for wealth management. As Chris mentioned, we have many players. So I think Switzerland especially is well positioned in this race for consolidation, thanks to also the exposure to Asia. I think 1 billionaire is created every week in Asia, and their assets under management is expected to grow at 10% a year. And Switzerland is well positioned there. I think UBS is the #1 private banker in Asia, and Credit Suisse is #3.
Leo?
If I can also comment to Chris's. I mean, it'd be quite a vision if there was only a CEO and CTO in a tech company. However, I think there's one ingredient. I mean, I would say this right but I think it's the relationship angle with the client, and I think there's really no substitute for that. And I think that's precisely the reason why, for example, the wealth management sector has not consolidated further, because, you know, we see clients joining Credit Suisse, but then maybe some other clients going away from Credit Suisse for maybe smaller platforms, less product to offer, but just because there is a good relationship with the right people. So I would say, yes, a CEO, a CTO, but then some very good relationship managers who can have this, because I think there's, especially on the upper end of the segment, so maybe less on the affluent, but more the high net worth, what we notice is that there's really no substitute for having good relationships with clients. To your second point, which is the one about Switzerland, I think Switzerland, again, is, I think where Switzerland might be disrupted a little bit is indeed on the affluent side. And we see online banks being created a bit around the place, etc. I think where Switzerland has a great advantage compared to many countries is that if you look on the high net worth and ultra high net worth segments, there are actually not that many platforms globally or countries globally where a client can get so many services in one place, putting away banking secrecy and all these other reasons why Switzerland was strong in the past. Now it's simply we're used to dealing with clients from a lot of different countries at the same time. So if you're, I don't know, somebody from Finland and you want to open an account in rubles in a bank in England, the reality is probably the best place to do it is Switzerland. So, and you can have all these different permutations.
At the moment, I can confirm
yeah,
that
absolutely.
coming from London.
But the amount of different permutations that we have in terms of products, currencies, client origins, you know, all the KYC and regulatory setup to be able to deal with all the countries, I think Switzerland has that edge, and I think we'll maintain it quite a while.
Sounds good. Do we have time for questions? Yeah. I can't see a lot at the moment, but are there any questions? Gentleman in the front.
Hello. I come from Spain, and I would like to know if you see any initiative from the part of Swisscom or any other Swiss operator like Orange Bank in France and in Spain. Thank you very much.
Questions to you, gentlemen.
Creating a bank.
Non-bank coming.
I can mention that in Switzerland we are working together with Swisscom on an open banking hub. So maybe, I mean, first of all, Switzerland is not affected by PSD2, so that open API culture is not here yet. And those big telecoms, also financial data companies, they simply want to facilitate it. And Swisscom created their open banking hub to simply help other fintechs, to help banks to securely exchange information between each other. But as far as I know, they just want to be a neutral, maybe data custodian or a technology provider.
Any more questions?
Maybe just,
you want
just to add, just to the point maybe which Leo mentioned. So there are, I think, also initiatives in Switzerland to build banking capabilities. But the complexities of many Swiss banks currently tackle, I think none of the technology or telecom players want to go into that because it's a very specific skill set or capability set, which I don't think this is something that that should be threatened or disrupted in the short term.
Yeah. I can't bring the mic to you, otherwise.
One question to the client advisor from Credit Suisse. Are you focused on Swiss clients or international clients, and do you see different in investor appetite, like Swiss clients invest in medtechs or international clients invest in fintechs? So what is your experience on that side?
Yeah, I mainly focus on everything outside of Switzerland, so EMEA, LATAM, excluding Switzerland. But the trends are actually, I can't say there's a big differentiator, especially when it comes to, I'd say Europe just in general. I think the key sectors that we see from a tech perspective are definitely fintech, retail tech, and healthcare tech, amongst everything. And I think it's because it's sectors that people can associate with, be it from Switzerland or even outside of Switzerland. And then what we find a little bit outside of Europe, so maybe more emerging markets, it's more about some of the later stage larger players, so kind of pre-IPO rounds and so forth, where they're already well-recognized global names where people want to come in and participate. I have a feeling that, and it's a big generality, I mean, there's, you know, but in Europe, I feel that the groups that have decided to go into tech go in a little bit earlier than some of the groups that we've seen in, call it, emerging, a bit outside, save for some pockets of people that have actually made their wealth in tech. Hope that answers the question.
And the last question, I think, comes from me. Again, to you, Larry, I can't resist asking you that question. Amongst your investors, is there more appetite for fintech or for bank stocks at distressed value?
Well, it shouldn't be, but I think fintech. Well, when you see that Wirecard has got a bigger market cap than Deutsche Bank, right? I think people are definitely into. I think what's happened. Maybe there's a bit of a change, but what's happened over the last 4 or 5 years is more and more. People don't look at the listed equity market in the same way compared to the potential for direct equity. So people have put away a bit. People don't look so much at the liquidity premium that comes between listed and non-listed companies. So a lot of people were investing into direct because yields are low and equity markets are very high. So there's been a huge surge of people being sophisticated, less sophisticated, going into direct non-listed situations. My personal feeling is I think that's going to reverse slowly because people are going to realize it's not that easy to make money in direct deals. Whilst obviously the public markets, you have a lot of transparency and so forth. So I think these things are cyclical.
Yeah, and I would like to close this with a bit of a positive outlook. I think that the players who will make most out of fintech are the ones that are already known, who already have the established client relationships and the trust already, because that's what fintechs are, especially in the B2B space, B2C space, are struggling with, is building trust. So these players that are already in the market and transform, let's say, relatively early onwards, probably have the best. So maybe the best opportunities, maybe buying bank stocks at the moment is not completely the worst thing to do either. Thank you very much to my panel, and please join me on a little hand for that.